1.3, the balance sheet as at 30 June 2015. So this is the template that we are going to be making use of. We have already been given the amount for the fixed assets and the non-current assets. We are also given the ordinary share capital. Okay, so let's start here by looking at the current assets. The inventories, remember the inventories, you record the inventories that are on hand. The inventories on hand, if you go back to B, okay, trading stock on 30 June 2015 was valued at 191,900. So that is the amount that we are going to record for the inventories, 191,900. Okay, and then the trade and other receivables, we open our bracket here. We have got the debtors control given in A. Debtors control is 316,000. 316,000. Okay, let me write it properly. Okay, 316,000 is the debtors control, and then there is an adjustment that is given. Which adjustments are affecting our debtors control? Besides what is on B, there's also an adjustment that is given on D. A debtor's debit balance of 1,000 in the debtor's ledger must still be transferred to his account in the creditor's ledger. So this one is also going to reduce our debtors minus 1,000 rand. And remember, from B, we also had the provision for bad debts must be adjusted to 9,000. We minus the 9,000. Okay. What else do we have? Let's check from A. Again, we have got, let's see, income receivable. Accrued income is also another trade and other receivable. So we can add 5,200. Okay. From the adjustment, I'm sure there was also another prepaid expense. It was on number 4. Remember the insurance, which we calculated here on 3.1.1. The insurance, which was 4,500. That is another prepaid expense, which is a trade and other receivable. So we also say plus 4,500. Okay, so let me say it again. The trade and other receivables, we've got 316,000 for the debtors control, minus the 1,000 which was transferred to the creditors, minus 9,000 which is the new provision for bad debts, plus the accrued income for 5,200, plus 4,500 which is for the prepaid expense on insurance. So the total there for our trade and other receivables now becomes, the trade and other receivables becomes 315,700. 315,700. So we are left with the cash and cash equivalents. Okay, and then we'll also look at the total assets. Okay, so far on the assets section, this is what we have. Okay, fine. Let's see what else we have here on the retained income. On the ordinary shareholders equity, for the retained income that we have already calculated here on 3.1.2. So I can even indicate 3.1.2 here. And then the balance was 2,952,000. 2,952,400. Okay, that is the retained income. What else do we have? Okay, we can see, okay, now that we have got the retained income and the ordinary share capital, we can get the ordinary shareholders equity. Let's add these two amounts and see how much we're going to get. 124,400. 8,524,400. That is our ordinary shareholders equity. Okay, for now let's pause here and then we will continue. Okay.